Welcome back to the Excellecore Real Estate Channel. My name is Jeremy Rickard. I am the broker of Excellecore Real Estate right here in central sunny Florida. And glad to have you with us. As always, remember three things. We make no decisions based on fear. We want to get you as educated as possible. And we want to be your real estate guide, especially if you're looking to sell or buy a home here in the central Florida area. We'd love for you to contact us. You can reach us at excellecorerealestate.com. The links will be down below. But today, I want to talk about mortgages. I've had discussions with some friends of mine and past clients and hopefully future clients, and I asked them about mortgages on their homes, and a lot of people don't even know what mortgage they have on their home. And that always fascinated me, so I thought, well, let's bring some clarity to that, especially for people who may be getting their first mortgage or are unsure which mortgage to go with. Did a video previously called the 6 Hurdles to Buying a Home. I'll put a link down there in the description for that one if you haven't seen it. But one of the first initial hurdles to purchasing your home is to become pre-qualified or pre-approved. And in so doing, you want to elect the right home loan for you, the right mortgage for you. But so many people don't even know some of the foundational principles behind why we have different mortgage types. And I hope to alleviate a little bit of that confusion today, because again, we're making no decisions based on fear and want to get you as educated as possible. So with that said, let's jump into it. Which mortgage is right for you? Now, there are all kinds of reasons why some people may choose the various kinds of mortgages, and I'm not saying that there's one that's necessarily better than the rest. I'm just going to kind of give you the perks and drawbacks and some of the things that go along with each mortgage. And so let's start just by saying what type of mortgage that we're actually talking about. So the first one here, we're talking about a conventional mortgage. A conventional mortgage, realistically, is a private money mortgage. And when I say private money, this is what I mean. We all put our monies in banks, and those banks, whether it be Chase or SunTrust or Wells Fargo, they take that money and they go lend out to various people to do businesses, for car loans, for all kinds of things. One of those things is for mortgages, and so that's our private money being lent out for loans. So that's a conventional loan. An FHA loan is a government insured loan. Oh Lord. Government insured loan. And so, because it's government insured, they want to make sure that the investment is protected. Several years ago, back in the mid or early 2000s, when the real estate market really took a dive, a lot of people lost a lot of money and a lot of people were affected. You might even have been affected. I was personally affected by that. And a lot of that had to do with the fact that the government doesn't make any money. The way that it gets its money is from us. And so this is actually ensuring that the government doesn't lose money like it did back when the market really fell out early on. We'll talk about that insurance here in just one second. But a VA loan is another type of government loan. But the VA loan is basically for our veterans. If you're not a veteran, I'm sorry, but that loan is not for you. It's a way of saying thank you to our veterans, those who serve our country in the military. And we do appreciate all of our veterans. So that loan is specifically for them. And then lastly, a USDA loan, which is another type of government loan. But in essence, let me say it this way. It's more of a rural loan. What I mean by that is based on location. So it's more agricultural or rural in nature. You're not going to find that loan in the cities. And generally speaking, you probably won't find it in a lot of the suburban areas. There are a few areas that feel suburban, but do still qualify for this. But as just a basic loan type, it's more rural in nature. Okay, so let's talk about the percentage down, the money down on these various loans. On a conventional, the minimum down on a conventional loan is 5% down. Now, out of all of these loans, that's going to be the highest down payment as a minimum, okay? And for an FHA loan, the minimum down is 3.5%. If you are a veteran and you go with a VA loan, it's 0 down. Very attractive loan, okay? USDA loan, if you can find the property in that rural area, you like the property, it qualifies because of its location. This is also 100% financed just like the VA, and so there's 0 down here. Again, very attractive loan. So let's talk about some of the perks. The perks to a conventional loan. If you put 20% down or more, you don't have to have, so 20% down, you don't have to have mortgage insurance, okay? Now on this one, it's called P.M.I. So you might hear two different things. We're talking about an FHA loan versus a conventional loan. Conventional loans insurance is P.M.I, which stands for Private Mortgage Insurance, okay? So you don't have to have that if you put 20% down or more. If you only put 5% down over time, you will have enough equity that you're below that, you have 80% or 20% equity in your property, you can have the mortgage insurance go away. And I did another video on that. If you have a conventional loan, you're local to the Central Florida area, I'd love to help you get that mortgage off as quickly as possible. That helps nobody but the lender. That's it. That's the only person that does it. It insures the lender. It doesn't do anything for you. So I want you to put that money back in your pocket. So go check that video out as well. On an FHA loan, the perk is the fact that they have some of the most liberal qualifications with regards to debt to income, your debt to income ratio. Debt to income ratios are basically the money that's going out, that's your debt, versus the amount of money that's coming in. And those ratios can be upwards of 43% on an FHA loan. Another perk to an FHA loan is if you've had a foreclosure or you've had a short sale in the past, you can actually get into an FHA loan within about 3 years after that foreclosure or short sale took place, whereas on a conventional loan, you're going to have to wait upwards of 7 years to get inside that home. Some more perk to the VA loans and the USDA loans obviously are the 0% down, but there are drawbacks or restrictions, I should say. And again, we're talking about location as a restriction on a USDA loan. Whether you're a veteran or not would be a restriction on a VA loan. Let me think. Another thing for the USDA loans would be there's maximum income requirements. You say, Jeremy, did you say that wrong? Aren't there minimum income requirements? No, there are maximum income requirements on a USDA loan. So it's a little bit different thought process. You can only make a certain amount of money to qualify for that particular loan. Drawbacks for conventional loan versus an FHA loan. The FHA loan generally as a perk is going to have a lower rate, lower percentage rate. The conventional loans will have a higher rate than an FHA, but this is really where the thought process is, which one should I go with? And most people are coming down to an FHA or conventional loan. If you're not qualified in these areas, this is what you're thinking about. And so the drawback would be the fact that no matter what you put down on an FHA loan, you're always going to have mortgage insurance. It's never going to go away, okay? And so the thought process is, would I rather have a higher rate but have the ability to have my mortgage insurance go away, or would I rather have a lower rate knowing that I'm always going to have mortgage insurance? So those are the things you might want to think through as you're debating about which type of loan to get. And even if you just walk down the qualifications in terms of, have I had a foreclosure or have I had a short sale? Well, that's going to narrow down which ones. Are you a veteran? If you are a veteran, I would highly encourage you to look into a VA loan. It's an absolutely gorgeous loan for our veterans. Look into that. If you are looking in the rural area and you don't have a whole lot of money down, USDA loan is a great loan to choose from. So I'm hoping this brought a little bit of clarity to the 4 different kinds of loans. And obviously there are probably some questions that I did not cover or questions I didn't answer in this video. And if there are, please comment. Send me an email at sold@excellecorerealestate.com. I'd love to interact with you and get those questions answered for you. Again, I want to get you educated as possible so that you make no decisions on fear. And I'd greatly love to be your guide in real estate. Thanks, guys. We'll see you next time. But as always, remember that excellence is at the core of who we are.